Ever feel like watching paint dry is a little too fast-paced? Well, buckle up because today we're diving into a world where the blink of an eye feels like an eternity. We're talking scalping, folks, a trading strategy that makes the stock market look like a video game on fast forward. Think hundreds, sometimes even thousands, of trades in a single day.
Whoa.
The goal. Squeezing profits out of those tiny price jumps, those fractions of a cent most folks wouldn't even notice. We're taking our cues from this Investopedia article, Scalping. How small, quick profits can add up, it's a wild ride. And to help us navigate this financial freeway, we've got our expert in trading strategies, ready to make some sense of this high-speed chaos for us.
Let's do it. You know, there's a certain beauty in the chaos when it comes to the markets. Gotta love it.
Music to my ears. So the article jumps right into the nitty-gritty, throwing around terms like bid-ask spread, like it's second nature. Could you break that down for us? What exactly are these scalpers looking at?
Sure, think of it like this. Every stock is like a constantly moving target. The bid is what someone's willing to pay at this very second. And the ask, that's the seller saying, here's my price. That tiny difference between the two, that's the spread, and it's the scalper's sweet spot.
So they're basically playing this high-speed game of buy low, sell high, except it's happening at lightning speed.
Exactly. And they're doing it hundreds of times a day, raking in those tiny profits with every trade. But it takes a special kind of focus, a certain agility to keep up with that pace.
The article mentions something called level 2 quotations. Is that their secret weapon?
You could say that. Level 2 quotations give them this real-time X-ray vision into the market. They see not just the current price, but all the buy and sell orders waiting in the wings. It's like having a sixth sense.
Okay, I'm starting to understand why they call this high-frequency trading. It's like trying to read an entire book in the time it takes to blink. But why not go for those big wins, those massive market swings everyone dreams of?
Well, it's like the old saying, slow and steady wins the race. Scalpers, they're all about minimizing risk. Yeah, those big market swings are tempting, but they're also unpredictable.
Right, like trying to time the lottery.
Exactly. But those micro movements, those tiny ripples, they happen constantly, and that's where the scalper thrives. It's like instead of betting on the whole game, they're betting on every single pitch.
So it's less about predicting the future, more about mastering the present. I like it. It's a certain kind of zen, wouldn't you say?
Absolutely. And you know what's interesting? Some brokers actually make a profit off the sheer volume of trades these scalpers are making.
Wait, really?
Yeah, it's called payment for order flow. A little controversial, but a fascinating dynamic nonetheless.
Wow, a whole ecosystem built on these high-speed trades. Who knew? The article also mentioned that scalping, it's not just a standalone strategy.
Right. It can actually be a way to enhance other trading styles. Think of it like a side hustle for your long-term investments.
Okay, that's interesting. I'm intrigued. Give us an example.
So let's say you've got a stock you're holding on to, believe in it for the long haul.
Yeah.
But even within that bigger picture, there are going to be these mini peaks and valleys.
Those are blips, yeah.
Exactly. And a savvy scalper can take advantage of those, buying low, selling high, and actually end up lowering their overall cost basis on that long-term position.
So they're making money while they wait.
You got it.
The article gave that example of buying a stock at, say, $20, planning to hold it, but suddenly it jumps to $20.20 within minutes. A scalper might sell high then, lock in that 20-cent profit, and buy back in when it dips again.
Exactly. They're like financial ninjas profiting off those tiny market inefficiencies.
This is wild, honestly. Sounds equal parts fascinating and terrifying to me.
Well, you're not wrong to be cautious. The article definitely doesn't sugarcoat it. Scalping is not for the faint of heart.
Definitely not for the casual investor who checks their portfolio once a month.
Exactly. This requires nerves of steel, split-second decision-making, and a deep understanding of how the market works, especially those order types.
Order types. That sounds a little ominous. Give us the rundown.
Sure. Think of each order type as a different tool. You've got your market orders. Those execute immediately at whatever the going price is. Fast, but maybe not the most precise. Then you've got limit orders, only go through at a specific price or better. More control, but you might miss out if things move too fast. And of course, stop-loss orders, those are your safety net, automatically selling if things start going south.
So it's all about choosing the right tool for the job, depending on the situation.
Exactly. You don't bring a knife to a gunfight, right? Same principle applies here.
And I imagine the right broker is crucial too, right? If you're making so many trades, even those tiny fees could add up.
Oh, absolutely. You need a broker that's built for speed, Low commissions, minimal slippage, and ideally direct market access so your orders get filled instantly. We're talking milliseconds mattering here.
This is making my head spin, and we're
Okay.
just scratching the surface. I have to ask, though, the article mentioned riding the trend wave. What does that even mean with these short-term trades?
Great question. Even though they're focused on those minute by minute changes, you still got to have a sense of the bigger picture. Is the market trending up, down? Even within those trends, there are going to be these smaller waves. A good scalper will recognize those and adapt.
So it's like you're focused on this one wave, but you got to keep an eye on the tide, so to speak.
Exactly. Speaking of things that can make or break a scalper, volume is key.
Volume, as in how much trading is happening.
Exactly. High volume stocks, those are crucial. Think of it like this. More buyers and sellers means more liquidity, easier to jump in and out of trades quickly.
Makes sense. The more people dancing, the easier it is to cut in.
Now you're getting it. Low volume stocks, those are like trying to dance in an empty room. Not much opportunity for quick moves.
So, high volume, check. Got to ride that trend wave, check.
Mm.
Understanding those order types, check. This is a lot. But even with all that, are there any upsides besides the potential for quick profits? Does it build character or something?
Well, you'll certainly develop lightning fast reflexes.
No.
But seriously, the article did mention a few perks, one that surprised me. You don't need to be a Wall Street wizard to do this.
Really?
Yeah, you're not doing deep dives into company financials here. It's more about reading the market's mood, its emotions in real time.
So it's less about being a financial scholar, more about being a market therapist. I kind of like that.
And because you're in and out so quickly, it can actually be less risky than those long-term plays.
Less time for things to go wrong, I guess. Like that game of
Yeah.
musical chairs, always got to be quick on your feet.
Exactly. Minimize that downside, maximize those opportunities. Of course, no trading strategy is perfect.
All right, so we've talked about the good, the quick profits, the excitement. But let's be real. What about the downsides? What are the potential pitfalls here?
Well, remember those transaction costs we talked about? Those can really eat into your profits if you're not careful.
Even those tiny fees, they add up with all those trades, huh?
Like you wouldn't believe. And it's not just the financial cost, scalping. It takes a certain kind of mental toughness. It's not for everyone.
I bet. Staring at the screen all day, making hundreds of decisions, sounds intense.
Intense is an understatement. It can be a real roller coaster, emotionally speaking. The article actually compared it to high-stakes poker.
Now that you mention it, I can see it. You need nerves of steel for both.
Absolutely. You got to be able to think clearly under pressure, manage your emotions, know when to walk away, even when you're on a roll, or maybe especially then.
Easier said than done, I'd imagine.
It takes practice, discipline. It's
Okay.
not just about reacting. It's about having a strategy, knowing your limits.
This has been such an eye-opening deep dive, honestly. We've covered a lot of ground here, the good, the bad, and the ugly of scalping. Definitely not your grandma's investing strategy, that's for sure.
Definitely not.
Yeah.
But hey, that's the beauty of the markets, right? There's a strategy out there for everyone. The key is finding what works for you, what fits your personality, your goals.
Couldn't have said it better myself. Huge thank you to our expert for demystifying the world of scalping for us. And to our listeners, if this got your gears turning, definitely check out the full Investopedia article, Scalping, How Small Quick Profits Can Add Up. It's a wild ride. Until next time, happy trading, everyone.